Blackrock and Fidelity now have over $4 billion in assets under management for a combined total of nearly 100,000 Bitcoin. Plus, are spot Bitcoin ETFs going global? Will the Evergrande bankruptcy and a slumping Chinese stock market pave the way for a Hong Kong spot Bitcoin ETF? Vanguard continues to double down on its terrible Bitcoin messaging. And finally, Janet Yellen has some remarks on inflation today. Is this yet another signal that there will be a Fed pivot this year? Let's get into it. Welcome to the Monday, January 29th edition of the Bitcoin ETF Daily Show. I'm Dante Cook, head of Swan Business. In this show, we discuss the latest news, events, winners, losers, and key information surrounding these historic Bitcoin ETFs. Here at Swan, we're on a mission to educate the world about Bitcoin. So please like this video, subscribe to the channel to extend our reach and help us to cut through the noise on YouTube. Sinner, Medvedev, Curry, James, Mahomes, Jackson, Blackrock, Fidelity. It's great to see rivalries come back into sports and in the ETF battle. Blackrock and Fidelity now own a combined total of nearly 100,000 Bitcoin worth over $4 billion. That's about 9,000 Bitcoin a day that are flowing into these ETF funds. Although IBIT, which now has over $2 billion in assets under management, has currently overtaken GBTC as the #1 most liquid Bitcoin ETF in the world. Fidelity landed the knockout blow on Friday with a lead for the day of inflows of 100 million to BlackRock's 87 million. The total for day 11 landed at 14.8 million in total net inflows. GBTC continued to see a decline in outflows, with just 255 million leaving the fund on Friday. That's in comparison to an average outflow of 500 million over the last 11 days. Need another reason to be bullish on the ETF's impact on Bitcoin's price? Google revised its ad policy, and Hong Kong is potentially launching another spot Bitcoin ETF, and there are even whispers of Charles Schwab entering the ETF race. In a shocking turn of events, Google revised its advertising policy to allow Bitcoin ETF issuers to advertise on its platform. And you wonder why. BlackRock, the corporation, owns over 7% of Google stock, and its largest ETF, IVV, owns over 39 million shares. Uncle Larry at BlackRock went to cousin Larry at Google and said, "Who's your daddy? Who's going to list these ads?" Google owns a 39% market share of the digital advertising space, so expect this to widen the top of the funnel for the Bitcoin ETFs and Bitcoin in general, as trillions of dollars will pour into this space over the coming years. In other news, spot Bitcoin ETFs are going global, baby. Harvest, one of China's largest fund managers, filed to launch a spot Bitcoin ETF on the Hong Kong exchange. While this is just an application for approval, we can expect to know the timeline of when this will launch rather soon. It's clear that the momentum in the US stock market for these Bitcoin ETFs, and even the European market, is causing players in other markets like Hong Kong to look at whether or not they should get into the game. Even Charles Schwab has been rumored to launch a Bitcoin ETF, which, to be fair, is really just a play for them to stay relevant with their retail customers. They won't actually have an opportunity to compete with the other ETF players, given that it's going to take several weeks for the ETF to get approved and then even launched. But this is actually a step in the right direction for Charles Schwab, which, unlike Vanguard, is not doubling down on their mistake. Vanguard doubled down on its bad Bitcoin stance, as Janelle Jackson, their global head of ETF markets, said that Bitcoin is an immature asset class that has little history, no inherent economic value, no cash flow, and can create havoc in someone's portfolio. Janelle, Bitcoin is an asset that's over 15 years old. And here's an interesting stat for you. It actually has 4 times as much trading history than equity stocks because it trades 24/7, 365. Since 2010, Bitcoin has traded for over 122,000 hours, or 8,760 hours per year during the last 14 years. Considering equities and stocks only trade 2,000 hours per year, Bitcoin is traded for the equivalent of 61 years of equity markets being open. So, 14 years of Bitcoin equals 61 years of stocks. Thanks, Adam, for giving us the stats here. And to it not having cash flows, who cares? Bitcoin has a compound annual growth rate of over 49% over the last 10 years. You don't need cash flow with an asset that produces value like that. Now, back to China for a quick moment. News of the Evergrande bankruptcy is sending shockwaves through the Hong Kong stock market. Hong Kong courts have ordered China's Evergrande to liquidate its $300 billion in assets. The firm defaulted on its debt back in December of 2021, and the restructuring process so far has not gone according to plan. Although the Chinese officials won't come out and make a statement about this large bankruptcy or this collapse, it's very clear this collapse could create fear not only within China's market, but within global markets. Hedge funds seem to think that there's opportunity to be had. Like Bitcoiners, they're buying the dip right now. I don't know if this is a wise decision or not. Time will tell. This is something that we should be following over the next couple of weeks. Finally, on Wednesday, we're expecting a new policy statement from the Fed. And with that, let's take a look at this new clip that we have from Treasury Secretary Janet Yellen.
How do you convince Americans and voters that those prices might not go back to where they were before the pandemic?
Well, I think most Americans know that prices are not likely to fall. It's not the Fed's objective to try to push the level of prices back to where they were.
Let's be clear about a few things. The Fed has a dual mandate. Priority number one, tame inflation. Priority number two, ensure a strong labor market. Historically, the goal has been to keep inflation at 2%, but we all know that that's a pipe dream. The story that they're saying is that prices are going down, but inflation is the rate of increase in prices over a given period of time, typically measured by CPI, which we all know is a fake number. Even if inflation is coming down by that metric, prices are not coming down. It's just merely the rate at which things are getting more expensive is slowing down. So like every episode, here's our opportunity to zoom out. Prices are not expected to drop. Don't think that your purchasing power in fiat currency will continue to gain over the years. You need to opt out of the system and opt into an asset with increasing purchasing power, like Bitcoin. Bitcoin provides you the protection of an asset without counterparty risk that acts like a commodity with the beta of a NASDAQ stock. Whether we are in a risk on or risk off paradigm, it's always a good time to DCA into your Bitcoin position and buy more of it. How do you do that? Don't just settle for getting into an ETF. Own Bitcoin directly. To close, let's take a look at what BlackRock says in their ads. Learn how iBit can help remove the operational burdens of investing directly into Bitcoin. With a company like Swan.com, you can sign up for an account, buy Bitcoin, and remove it to cold storage in less than a few minutes. Don't believe the lie that holding Bitcoin directly is somehow an operational burden. If you can memorize 12 words or even just write 12 words down, you're able to own and hold Bitcoin directly. Whether you're a business, whether you're a nonprofit, whether you're a high net worth investor, Swan offers you products and options to get into the Bitcoin race and own Bitcoin from any part where you're on in your journey, from first purchase to removing it to cold storage. We're there to help you every step along the way. And with that, we're signing off for today. This is Dante Cook with Swan.com. Happy stacking.